Welcome back to the Digital Asset Report. Bitcoin is pushing back toward the mid 70,000 range as digital assets rebound alongside shifting global macro conditions. Bitcoin traded past $74,000 on Monday morning, marking a 6-week high, while Ethereum climbed above 2,200. Bitcoin finally broke its 6-week negative streak, finding fresh momentum to move upward. As of Monday, Bitcoin is on a 7-day streak of green, the largest show of strength since we've seen the October top. The move comes as capital rotates back into crypto after a period of volatility tied to geopolitical tensions and oil price swings. The lead story this week is Strategy, and more specifically, the stretched perpetual preferred stock offering it's using to buy Bitcoin at an accelerating pace. In an 8-K filing put out on Monday, the company said it bought over 22,000 Bitcoin between March 9th and March 15th for about $1.57 billion. That pushed its total holdings to more than 761,000 Bitcoin. The funding mix is what makes this story really interesting. Strategy sold 11.8 million shares of its STRC preferred stock for about $1.18 billion during the week, plus another 396 million of its common stock MSTR. In other words, a preferred stock just raised more than $1 billion via an at-the-market offering in a single week. This is a unique milestone that has never been achieved in the history of capital markets. Strategy describes STRC as a perpetual preferred that currently pays an 11.5% annual dividend, adjusted monthly to keep the shares trading near the par value of $100. The bigger point is that for the first time since MicroStrategy started buying Bitcoin in 2020, it has successfully scaled another security to exceed the issuance of its common stock. STRC establishes a repeatable capital markets rail into Bitcoin. To put it simply, in the last week, more money entered into Bitcoin via STRC than via the Bitcoin spot ETFs themselves. Meanwhile, the rest of the market is starting to confirm that other institutions are stepping back in. Spot Bitcoin ETF flows have improved sharply in March, with roughly 1.34 billion added so far this month, and crypto-focused ETFs outperformed broader risk assets late last week. Crypto-linked equities also moved higher Monday as investors lean back into the trade. And elsewhere, the stablecoin story keeps getting more interesting. New research from Mizuho showed Circle's USDC reaching about $2.2 trillion in adjusted year-to-date transfer volume, ahead of Tether's roughly $1.3 trillion. Circle also shows USDC circulation near 79 billion as of March 12th. Right now, USDC appears to be gaining ground where payments, settlement, and compliance matter the most. In another sign that public market appetite is reopening for the sector, crypto wealth platform Abra said Monday that it plans to go public through an SPAC merger and list on the NASDAQ. The deal values Abra at about $750 million on a pre-money basis, and existing investors including Pantera Capital, Adams Street, Blockchain Capital, RRE Ventures, and SBI are rolling out 100% of their equity into the new company. Abra says the transaction could deliver up to $300 million of cash from the SPAC. And turning to the Fed, President Trump called on the Federal Reserve on Monday to hold a special meeting to cut interest rates right now. The request appears unlikely to be granted. Rising oil prices driven by the conflict in the Middle East have stoked inflation fears, making rate cuts harder to justify for the Fed in the near term.
Jerome, too late. Powell, I call him too late because he's always too late with interest. Should cut interest rates. He should cut them right now. They should have a special meeting. What's a better time to cut interest rates than now? A third-grade student would know that.
Putting all this together, the message this week is clear. Strategy is slowly turning capital markets into a Bitcoin accumulation engine. Crypto ETFs are drawing in money again, and stablecoins are becoming more specialized settlement rails. Traditional finance keeps building new wrappers around digital markets for public market investors, and this market still cares about price, but the bigger story is in the plumbing details of the financial markets. That's it for today. If you enjoyed this video, be sure to give us a like and follow along for more news just like this.